Hello traders, it's Sunday afternoon, June 11th, and it's time for the Sunday video. Let's take a look at our last pick, see how it did, then let's do some market analysis, and then let's find a couple of new picks for this upcoming week. BILL, Bill, that was the long that I highlighted Wednesday morning. I still like this stock. It looks good. You can see how it's had this nice horizontal breakout here, nice breakout here, starting to fill in some of this gap here above the 200-day moving average. Let's put our automated trend lines up so we can see where they come into play. Really nice breakout. There's a high plus and a high minus, so let's zoom out. Take a look at where these come into play. This is a very long-term trend line breach to the upside. I like it. It also came on decent volume. We can see that the stock still has some good relative strength. This stock has lots of room to run. So I feel that once this little move right here is digested, it'll have a nice, easy path higher. So I would continue to keep an eye on it, watch for these gains right here, as I mentioned, to kind of run their course. Eventually, buyers will become more aggressive. We want to see that 200-day moving average hold. We'd obviously like to see the S&P 500 break out to a new relative high, and we'll get into market analysis in just a second. So you're going to see a couple of other picks today. When a stock is breaking out to a new all-time high, oftentimes it's exhausted a lot of its fuel and it needs to just move sideways and you start to see herky-jerky movement. That's when we can use one of the new features that I've added, the alert features, and we can try to buy dips. So in this particular case with BILL, I think you just need to watch it and make sure that that 200-day moving average is preserved, and then you just watch for intraday relative strength and you can buy this stock. So because this is a longer term low, I feel that the stock has a good chance to continue higher. A stock that I highlighted last week, MDB, actually had a monster gap up. So in this case, I suggested waiting for LRSI M30 to pull back and to get a bullish cross like we're seeing right in here. We had one here, didn't really materialize into much of anything, got a little bit of a pop. We're getting another one here, but these will be your entry points. We want to see this horizontal support level preserved after such a big gain. Anyone who was long here is going to be tempted to take profits up here. So sell, 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 sell. But they're not able to drive the price down and they're not able to fill in any of this gap. And that's what tells you that buyers are still engaged. So as long as the support level holds and the stock has strength relative to the market, that's a good sign that buyers are still in there. I would prefer still to get a little bit more of a test into that gap and then to see maybe a bullish hammer or something to tell me that yes, this is a firm support level and buyers are very interested in this stock. So still like it, MDB, but I'm going to give you another example and I'm going to show you how we set an alert. I'd mentioned Apple as a really nice long in the chat room earlier this week. And so we're going to bring that chart up, and it has been in a very choppy upward price pattern. So we're going to bring up the daily chart, enter the symbol. And so here's the observation, and this is what I was talking about, how Apple is in a nice uptrend, but gee, every time that I get a nice looking breakout right in here, everything looks so good. And then the stock reverses. Oh, here we go. This one for sure. And then the stock pulls back. So this is a stair step pattern. When you see this, you want to enter here, you want to enter here, you want to enter here, you want to enter here. You want to buy those dips because the trend is still intact. Well, how the heck do I do that? How do I get alerted when that happens? Well, in this particular case, what we're going to do, and I had suggested this in the chat room, I said, you know, when M30 LRSI gets below 20 and then it rallies back above 20, that's the dip that you want to buy. And we actually had a couple of members who did this exact strategy. They entered Apple right here. And boy, were they happy Thursday and Friday. So let's take a look at how we set that. These are our new alerts. I'm going to right click, create alert. And you can see how right now LRSI is still above that 80 level. So we need it to go below 20. So I'm going to select LRSI from the menu. And I want to see LRSI M30. I'm going to go longer time frame because we want these pullbacks to be of decent size. On a 5-minute basis, it could just be a tiny little blip down and then a reversal. So we don't want that. We want a decent little pullback like this one. We want a decent little pullback like that one. So we're going to use the M30 time frame and give me an alert when LRSI, and in this case, I'm going to lower this, is greater than 20 because that's how the official signal is generated, but it's already above 20. So now I'm going to add that, and I need it to go from true to false to true. And that's exactly how LRSI is designed to trade. So from right here, you are above 80 and you fall below 80. That is a sell signal. Here you are below 20, and I'll expand this field just a little bit so you can see it. First, I'm going to save that search. And I'm going to take off OneOSI. We don't really need it right now. Now you can see it a little bit more clearly, but there you're above 80, there you fall below 80, so this is a sell signal in here, and then there you come above 20 right there. That is a buy signal right there. So this is a way that we can buy dips, and now when those conditions are met, below 20 and then above 20, I'm going to get an alert on Apple. Really awesome feature, great for day trading as well. The way that we use it on day trading is, let's say that you have a super strong stock that you're eyeing up, and let's use maybe Netflix. I had a member who used Netflix as an example on Friday, and we'll use the relative strength indicator. So I'm going to remove the LRSI study right here, and we're going to put the OneOSI study back up. So you come in and you think, gosh, really like the chart pattern on Netflix D1. So let's take a look at that. And yes, it's had a nice breakout. It had a compression here and another breakout to a new relative high. All right, well, I come in and I see this stock moving higher. I don't want to chase. I want to be patient. And you can see how on Friday, the stock opened on its high and then it pulled back. So what if I put up OneOSI, and of course, orange line is going to be way above zero with a big spike up on the open like this. This is a huge percentage gain relative to the S&P 500. So the orange line is going to be way above zero. Well, I want to set an alert so that when I get a dip like this or a dip like that, I'm going to know that the stock has lost its relative strength, which we expect it to after such a big gain, but then when it starts to recover that relative strength, that's when I want to get my alert. So in this case, right click, create alert, select strong versus SPY, and there's our strong, and we're doing it on an M5 basis. And now we have to use this condition because the condition is true. We want it to go false, and then we want the alert when it goes true again. And that's exactly how they entered here and exited somewhere up here when the stock started to lose its relative weakness. It became relative weak, excuse me. It started to lose its relative strength. That's how we use these alerts intraday. So when you come in and you look at these super strong charts, and you think, my God, Netflix is going to go. I want to buy a dip. Now you don't even have to think about it. You set that alert and you're not even watching it. You get the alert, then you can continue your evaluation. If it looks like a good entry point and you're watching the market, then it's all systems go. And you're able to set those alerts if you wanted to set it on an entire search. You'll be able to do that soon. Right now, you just need to do it for individual symbols. Let's take a look at the market, see what it did on Friday, which Friday, we had a nice breakout to a new relative high. I had mentioned to everyone, be careful. These gaps up like this to a new relative high have been faded typically. And there we get our bearish 1OP cross right about in here. And now we start seeing some resistance up here. And then there's your crack. We fall below the VWAP and we get a double top lower high. This is your sign that we're going to go lower. There's going to be some profit taking. So now we get this sell off here. We get this bearish cycle in 1OP. And then we get a nice bullish cross in here. So you've got tails under body in here. So this is a decent area to favor the long side. And we get a nice little rally in here, bearish cross here. And so we get a little drift lower near the close. If you're in a long only mode, and it's okay to be in that mode because the market just made a new relative high, then all you do on the open is you don't get all hot and bothered and get FOMO and, the market's going higher. Oh, I got to buy everything in sight. Take a deep breath. My God, the market is not off to the races by any stretch of the imagination. And if you start your analysis with the D1 chart, it's going to become blatantly obvious. So what has the market done? Why do I need to be so excited to chase this rally on Friday? Look at this. These are mixed overlapping candles. Look at the volume. Crappy volume. Way below average. Blue line below the zero line, below average volume. Why would I think that all of a sudden, with no news overnight, that this is the gap up that's going to go? This is the one that I have to buy. I don't even have heavy volume on this gap up, but no, I got to buy it. Market really hasn't done much of anything. Look at these mixed overlapping candles in here. This is ridiculous. There's no pace. There's no momentum. This is just a gradual drift higher. We did get a little bit of decent volume in here. This was earnings season in here, full roar. That's where that came from. But look at the price action. Didn't go anywhere. So right now, the market's in a holding pattern. Wait for the next news event. Wait for the next news event. Wait for the next news event. Well, what's the next news event? The next news event is the CPI. It comes out Tuesday. I'm hearing rumblings that people are looking for a good number. Where have I heard that before? They're citing that used car prices, according to Manheim, are starting to come down. They're also looking at the hourly wage component in the last unemployment report, 0.3%. They're looking at ISM manufacturing, which is a survey. 85% of the respondents in the survey said that on the manufacturing side, they're starting to see lower prices come in. And we've also started to see lower inflation. China released its producer price index, and I believe it was down 4.5%. So the general consensus is that inflation is not going to be a problem. And in the last few times when inflation has come out hot, the impact on the market has been very muted and very temporary. And I believe that's because the consensus is that the Fed is going to pause. FOMC statement on Wednesday, that is what everyone will be watching. So Tuesday morning and Wednesday morning, we're going to get PPI and CPI coming out. The Fed's already made up their decision, so I don't think they're going to be really influenced by that number. And then everyone's expecting that there's going to be a pause this month, 30% chance of a 25 basis point rate hike, but an 80% chance that they hike in July. So they're looking for just a 1 month reprieve here. Now, Canada raised their interest rates last week. and we've got the ECB saying that they're going to raise 25 basis points this Thursday. So interest rates are continuing to creep higher. That's what's on the docket this week. The market needs some kind of news to break out of this pattern where it's just moving sideways. We have a nice horizontal breakout here. We want to see that breakout hold, because if on Wednesday, ka-chunk, we crack down, then we're back in the range and we're back to some of this choppy type of trading. So ideally the Fed does pause, and maybe they suggest that they're going to continue to pause for a few more months. It's not consistent with anything that I hear, okay? I'm hearing that the Fed wants to keep their foot on the brake. They want to head off inflation. It's been super hot. It's been at around a 5% clip. They want a 2% clip. And when you look at the different things that could cause the Fed not to raise rates and to pause, it would be that they see the market reacting very negatively and that there's a crack in investor confidence. We're not getting that. This is like a 52-week high. Okay, well, they might pause if they saw inflation come in. They haven't seen that yet. They might pause if they started to sense that the economy was faltering. We haven't seen that. We had 339,000 new jobs last month. So, from my perspective, they don't have the debt ceiling to worry about either. That can got kicked down the road for 2 years. From my perspective, I think they're going to keep hiking. Maybe they take a pause this week, but I think you're going to see them continue to raise rates as long as inflation stays persistent. They want to get it down to that 2% level. So we'll see. Could be a little surprise component. There's only a 30% chance priced into the market right now that the Fed is going to hike rates by 25 basis points this week. Surprise, in my opinion, favors the downside because we're not seeing a lot of fear in the market. And I'm going to put up VXX, and that is one way that we can take a look at option premiums that are a little bit further out. And you can see option premiums, when they get really rich, that's a sign of uncertainty, that's a sign of fear. Conversely, when you start to see option premiums decline like this, that means that no one is worried. There's a lot of complacency. They feel that there's no threat right now in the marketplace. And when you get these big drops like this is usually when you can get a surprise event that catches everyone off guard. I'm not bearish. I'm not buying a boatload of puts ahead of the FOMC statement. I'm staying very neutral. I'm trading what is in front of me. That's all I'm doing. Sticking with day trades. Maybe I have overnight swings. Maybe they last 2 or 3 days. That's the time frame that I feel you need to be in right now because the market is not going anywhere fast, just chopping around. But there is some decent rotation. So we're starting to see some rotation into the small cap stocks. IWM is one index that we use to measure that. And you can see how IWM has broken out to the upside. Well, this is a risk on move. So you're starting to see some rotation out of those big cap tech names, and you're starting to see it into some of these smaller cap names. So let's take a look. Because we've got the FOMC statement, I really want to have a bullish pick and I want to have a bearish pick. That way, whatever the market throws at us, you'll be able to trade. I do also feel that given the lackluster price action that we've seen the last 4 days, we could be in a holding pattern until that FOMC decision. Get the CPI Tuesday, maybe not, that causes some kind of market reaction. We'll see. If it comes in hot, if it comes in north of 5%, that's going to weigh on the market, I feel. So we'll watch for it. We'll see what happens. So let's take a look at some stocks that are setting up well for us. And I'm going to go in. One thing that you'll notice on the charts is that we have a series of dots here. And so this is a new feature that we added. You can right click on the column header, edit columns. And these are all the choices that you have. So this is what we can display, and it makes it so much easier to identify stocks that are strong relative to the market and that have heavy volume at a glance. And you can see it on a 5-minute, 15-minute, daily basis, any time frame that you're choosing. I prefer to have 5-minute, 15-minute, and D1 variables because I feel that gives me a good mix of longer term and shorter term perspectives. And so that's what I've got marked primarily. We will be opening this later this summer to all of the variables. So you'll be able to put anything that you'd like in your custom searches. And because this is after hours, you'll see the blue dots for the daily, and that means that it was above average trading volume. If we were intraday, you would also see the 15-minute and the 30-minute boxes populating as well. So what we would do when we're day trading and we have a bullish bias and a bullish search that we're running, is we would look across these columns. You want to make sure that you've got nice blue dots because that tells you that the volume's been heavy all day. And then we want to see these nice green dots. So MTCH was a stock that we were on very early Friday. Beautiful technical breakouts. You've got a high minus trend line here, a high plus here, a very long-term high minus trend line here. And once that stock got out of the gate on heavy volume right in here, it never looked back. It just kept going and going. So let's take a look at some searches. I've got a couple stocks in mind that I will show you, but this is how easy it is to spot that. Look for the blue, look for the green. All right, that's going to be my long pick, or that's where my focus is going to be. So let's go in and take a look at the heavy buying search because I want to get you to the pick. And Tesla was one that stuck out. And here you can see on the daily chart, we've got a couple of trend lines. In order to see where they originate, we need to zoom out. And here we can see that is a very long-term trend line that was breached on Thursday with follow through on Friday. And the stock was able to get above this high plus trend line on Friday. It's above the 200-day moving average. Excellent volume, excellent relative strength. I like Tesla. So let's take a look at the 5-minute chart. So now you come in Friday and you go, Tesla looks great. Oh man, this stock is making a major D1 breakout, but I don't want to chase it. And the market doesn't look like it's doing anything today either. And it could fill in more of that gap. You can see it gapped up and it starts filling in some of this gap. So, I wonder if there's a strategy I can use that'll help me enter this stock. So what I'm going to do is go into all of these studies and I'm going to add LRSI back to the chart. And then we're going to use the default settings. And here I can see that it's just starting to poke back up on a 5-minute basis. But you can see on a 5-minute basis, we've had a few of these crosses. That time frame is just a little bit too short. So let's go into the M30 time frame. This is much better. Now we can see there would be an entry point right here for a long. Here you would actually start getting into a dip for a short. It runs its course. There's your entry point for a long. Now you're starting to get into overbought territory. You get your little pause in here. And then you get a nice cross right in here. That's another entry for a long. Why don't I do the same thing here and wait for that M30 to come below 20 and then back above 20? And so I'm going to right click, I'm going to create an alert, and I'm going to select LRSI, and I'm going to use M30 as my basis, and I'm going to use a value of 20. So yes, I'd like to see this above 20, but it's currently above 20. So I need it to fall below 20 and then go true. So I mark that box. It's exactly how I would be trading Tesla. If you don't like chasing and it makes you really uncomfortable, but you like buying dips on super strong stocks, this is how we do it. And with the market being sideways like this is the perfect opportunity to do that. You want to buy these dips. So now that we've got a nice bullish pick that we're going to be watching, let's shift gears. Let's see if we can find something on the bearish side. I did go in. I'm cheating. Bearish picks have been hard to find because the market has been drifting higher. So I'm going to go into a search that's called bearish SMA cross. This means that the stock was above one of the major moving averages yesterday. Today, it is below one of the major moving averages. And then I'm just simply going to look for a bunch of red dots, and SMAR was a stock that caught my attention. And if we go into the daily chart, you can see why. Let's zoom out here and see where that trend line comes into play. This is a very long-term trend line here, so that would be a support level. We draw the trend lines so that we know what our possible targets might be. So here is a low minus and a low plus. So these would be some profit-taking targets for us, but they've not been breached. This trend line right here has been breached, and that is a nice breach. There's your earnings after the close. Very bearish reaction to it. Stock falls below the 100-day moving average, closes below the 200-day moving average, breaks this low plus trend line on heavy volume. As long as the stock stays below the 200-day moving average, and that comes into play at 39.56, I like this short, currently at 38.63. So I like the short. I think it's going to set up well. What could I do with this information? You can see how the market really didn't do a lot on Friday. It kind of opened higher and then waffled around, and it closed pretty much where it opened. So we can expect similar type of price action. After a big sell-off like this in SMAR, we could get a little pop on the open, a little short covering gap. Well, I would want to short that when I get a fall back below the zero line for strength versus SPY. So let's take a look at maybe a 15-minute. And on a 15-minute basis, you can see how it has been below zero, which means it's weak on a relative basis on a 15-minute basis. And you can also see how once it got above zero and then it fell below zero right here, that was a nice entry point for a short. So opposite thinking. When we buy, we want to buy dips. When we short, we want to short rips. We want to short failed bounces. That is a failed bounce, and that is my entry. Right click, create alert, strength versus SPY. I want it weak relative to the SPY, not strong relative to the SPY, and I would like to use a 15-minute basis. I'm going to add that, and we are below zero, so I need to use this condition right here. And now, if Monday morning this stock rallies up, get a nice little gap up, little short covering, and then it starts to fade, 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 I'm going to get my alert. I might have a very nice entry point, and this stock could take out the low from last week with ease if we get any kind of market weakness. So if I get that alert on that short and the market looks bullish, I'm going to ignore it. I'm not going to trade it. But if the market also looks weak at the time, then I know I have a market tailwind working in my favor as well. I hope this video helps you. This is a fantastic new feature that we're adding. Imagine having all of the other variables available to us as well. Imagine how this might possibly set up for swing trading in addition to day trading. We use the same concepts, we just use longer time frames to generate those alerts, and that allows you for a strong that's in a stock that's in a very strong uptrend, to buy those dips, and then to ride that trend higher. Thanks so much for watching, everyone. I'm not sure when I'm going to do a video this week. It could be Wednesday, but that's ahead of the FOMC. Maybe it's better if I wait for that news to come out and do the video on Thursday morning. So that's my inclination at this point right now. I like Tesla on a buyback. I like SMAR to fade any failed bounces. Good luck with your trading. We'll see you in a few days. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.